Hyperliquid are on the edge of releasing 2 upgrades that massively change the entire ecosystem. I think these upgrades are the biggest thing to happen to the chain since the token generation event, and in today's video we're going to be going through what these 2 upgrades are and why I think they may create the next catalyst for Hyperliquid at large. So if that sounds good to you, you know what to do. Let's get into the video. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. Today we're talking about Hyperliquid, and if you don't know what Hyperliquid is, very quickly, Hyperliquid is a proof of stake L1 that was built with the intention of creating a central limit order book on chain. What's a central limit order book? All it is when you go to Binance or Bybit and you see that kind of crazy thing where you've got these like buys and sells on the right hand side and there's sort of like a price chart on the left. It's a place in which buyers and sellers can be matched for whatever price they agree on. You can set limit orders, so you can say I want to buy Bitcoin at 100k even though the price is currently 107k. It's the best way that anybody, well, that society essentially has found to trade assets that exists, right? It is what has been agreed. It's why every asset, whether it's the S&P 500 or Tesla or gold, whatever it is, trading assets in this way is the best for liquidity, for being able to keep the spreads really tight, so people can buy and sell with the lowest fees possible. It's the most effective way to do it such that market makers can remain profitable, and it's the best way for price to be truly discovered. So price can actually you can have true price discovery. What does that mean? It means price can get to the price. The asset can be priced at the value that it should be priced at the most effectively. These things haven't really existed on chain before, and Hyperliquid has allowed for all this stuff to be brought on chain. The actual chain itself is it can do about 100,000 transactions per second, 7 millisecond block times, really fast to finality, about half a second. So you've got, the whole point of it is super fast, really high throughput to allow for this order book to exist on chain. Now, these 2 upgrades that are happening, Hyperliquid again has 2 sort of elements, right? It's got the L1, Hyperliquid L1, and it's got this EVM. It's almost like a sidecar EVM. So far, the EVM has just seen sort of like forked applications that existed on other EVM chains. But this new upgrade allows for new stuff to be built because the L1 and the EVM can effectively talk to each other, allowing both sort of chains to decipher what's going on the other side. I'll go into why that's important in a minute. The other upgrade is called HIP3, and this is an improvement proposal that allows for anybody to go and launch their own perp market. So we're going to go through what these sort of things mean real quick, but just as a brief sort of like overview, the reason Hyperliquid's been so successful, right, is because it's made so much money. Fundamentally, they've been killing it. If we go through their like volumes in the last year, they've done a $1.6 trillion in volume. That's equated to monthly revenues of like, you know, $59 million or $62 million, $70 million. They're making a bunch of money. In the last year, they've done $320 million in revenue. And with all that revenue, they're using about 97% of it to go and buy back the token. As they're doing that, they're gaining market share from those centralized exchanges like Binance. This little line here says how much relative share of Binance is they're gaining each month, and you can see this is just an up and to the right chart. So they are dominating in this DEX market, but they're also trying to capture some of the centralized market as well, right, the SEX market. So needless to say, it's been very successful. This new upgrade is called HIP3, right? This is in their docs. It's kind of like a little bit dry to read, but fundamentally what it allows for is anybody to launch their own perp market. You can read through this if you like. We have seen this already, to be fair. They've already released HIP1, which allowed anybody to launch their own spot token on Hyperliquid. Some of these tokens ended up going for like $1 million in the pure hype mania back in December. But really, these have been quite unsuccessful. This token here, God, that was launched by 𝗵𝗇𝗏𝗏𝗏, for about, what's that, 975k, almost $1 million, has about $100 in trading volume on Hyperliquid, right? Terrible. This is a spot market though, and so I do think this new HIP3 that is perp market based is a bit different, and I'm going to go through why that is. But bear in mind, the spot market was not successful, so I might be wrong in this analysis. Right now, these spot tokens are going for like 25k ish, and that's the sort of cost of them at the moment. HIP3, these are the things you have to do, right? Anybody, it's called builder deployed perps, and anybody can launch a perp on Hyperliquid now. So if you go to Hyperliquid, you can now launch, well, when this upgrade goes live, you can create a perp market. But you need to stake $1 million hype. That's not $1 million, that's $1 million hype. Hype's at like 38 bucks today, so that's $38 million. Every 31 hours, there's an auction, and this auction is paid in hype, right? So you've got $1 million hype that needs to be staked, that's pulled out of circulation. You've got an auction that happens every 31 hours. Remember those spot auctions right now, about 20k per day, or sorry, 20k per 31 hours is roughly what they're selling for. You could probably assume that a perp one is much more valuable, and I'm going to go through why that is, so it probably goes for a bit more than that. If you do happen to buy it, you're in charge of creating the price feed, so it's called an oracle. It means you're in charge of making sure that the price is updated as it should be. You're in charge of the leverage, you're in charge of like the fee customization and the fee share, right? So the way the fees work, Hyperliquid themselves take 50% of the fees, and then whoever's deployed it can take up to a 50% share as well. So if you imagine 100%, Hyperliquid take 50, and then the builder could take 1%, 2%, all the way up to 50, so that the total fee is 100%. If there's like malicious acting, the reason this 1 million hype is staked is so that someone can come in, the validators can come in and slash that hype so that they can recover funds for any bad actors that happen. Because obviously if these markets are listed on the exchange and someone comes in and tries to like take money from people, they are disincentivized to do that if it's going to cost them like $38 million at current prices. And they must maintain their feed, right? So these are the requirements, and this is the detail down here. Fundamentally though, no core team or governance is needed. So anybody can come in, buy this market, run the market as they see fit, which decentralizes the choice of what is listed on the exchange. Right now, on the exchange, the only things that are listed are what the team want to list. This is a massive upgrade for crypto at large generally, because it means that anybody who wants to, who's willing to put up the money, can come up with a perp market on a very, very liquid exchange and list their token. So maybe we won't see those sort of like the Binance cabal come in and just kill tokens with a perp market. This allows for a much more user-friendly like means of creating perpetuals markets that previously can't exist, right? So that's what HIP3 is. And just as a thought experiment, we're going to go through what it could mean, right? It means anybody can come and launch a perp market. And so, for example, we could see an S&P, an SPX/QQQ index that's launched. Every day, the total volume of the S&P and QQQ is about $350 billion, give or take. So every day, enormously high volumes. But most of these volumes are not degens trading, right? So you can kind of like offset that 700 bill. What we're going to look at here is retail only futures volume estimates. And I went through a few different things and basically came to the conclusion that retail futures are about $13 billion per day. Futures this is. And if you don't know what a futures contract is, futures are very much like perps actually. In a lot of ways, they're quite similar. Futures are to equities or to TradFi what perps are to in crypto. But they're similar in a lot of ways. You can get leverage on them. They're settled in cash. There's no ownership of the underlying asset, and you can be liquidated. All the similarities are here. But there's very key differences, right? And the key differences are actually what make me think that equities on a perps exchange far better than equities on a futures exchange. And because it's better, it means that there's a good chance it gets used, right? Because if things coming on chain don't improve the UX, why are people going to do it? They're not. But in a lot of ways, bringing things on chain can improve the UX, right? So the differences between the two: on a futures contract, you have an expiry date. So every quarter, these things expire. On a perpetuals market, they're just that, right? They're perpetual. There's no expiry. So that means if you take out a futures contract, at some point they're just going to expire. That's not really very good if you want to hold the position for a long period of time. Not only that, there are no funding rates on futures contracts, which is obviously a benefit. Obviously, in perpetuals markets, you're constantly paying to keep that position open. Longs pay shorts or shorts pay longs, depending on which side has more people on it. If the side that has more people, pay the side that has less people. In a futures contract, there's no funding rates, but you pay an upfront cost to open out that futures. A futures contract is essentially just an option, right? If you don't know what option trading is, I'm not going to go into it right now, but that's basically all futures contracts are. And you can pull leverage into them. Now, again, we can go through these differences, but this other key difference down here is the minimum size, right? If you want to go and trade NASDAQ futures or S&P futures, you need to trade with about $25,000 as a minimum position. I mean, that's a lot. Whereas you could trade on Hyperliquid, you can trade with just $10, right? So they expire and they cost a lot. They cost a lot up front, and you need to have high initial positions. So if something like this can be brought on chain, then actually it's an upgrade for the end user, right? And also, obviously, you have to be in the US, and really hard to access these leveraged positions from outside the US. So every day, about $13 billion of retail money trades these futures. I don't think it's unrealistic for some market to come in, some team to come in, create a QQQ/S&P market on Hyperliquid and gain some actual volume. If it was marketed effectively, I don't think that's unrealistic. And so if we say that they're going to capture some market share, whether it's 1%, 5%, 10%, 20%, who knows? I think probably the truth lies in this 5 to 10% range. Not initially, I don't think this is going to happen off the bat, but I think 6 to 12 months in, the right team with the right marketing, with that launches the exchange, launches the market well and manages it very, very well, has a very good chance of capturing some of this market. Call it 5%. If they capture just 5%, that is a $118 million revenue stream for them, plus $118 million for Hyperliquid as well. Bear that in mind. And that means that they'll pay back their $40 million bond in 123 days. And thus, by launching this market, their ROI for the year is 3x. Remember that this is just a bond as well, so you can unstake the bond if you so desire. Obviously, you lose the right to, you forego the right to keep that market open, but it's not like it's a $40 million sunk cost. It does still exist if you manage it appropriately. So if people can capture some of this market, if a team can come in, and this is just one example, right? Like, who knows what actually gets launched? There is a very viable business right here, and Hyperliquid share in that success. So from the HIP upgrade, it decentralizes the markets that are launched on Hyperliquid. And if we can think of, probably you can think of more examples, but this is just one that came to my mind. I think that not unrealistic to see a market that captures 5% of the sort of like futures of the retail that are trading futures overall. And if that happens, then you've got a very successful market right there. This sort of is highlighted by the fact that these X stocks went live this week, and they were relatively successful, right? We're seeing more and more of these on-chain stocks happening. More of this infrastructure is happening. Yes, Robinhood also launched perps, but their perps are only 3x leverage. Doesn't really seem like enough for degens to be like super excited about. It's much more like calm and collected, which is not essentially Hyperliquid's main clientele, or the allure of trading means and trading on Hyperliquid. People like those high leverage stuff. So I think the HIP-3 proposal has the potential to do very well from that perspective. The second upgrade that's happening, and you can imagine that this HIP-3, there's a bunch of markets that could be launched. You can do the numbers on any of those things, but fundamentally it's a sink for Hype in terms of the stake, revenue for Hyperliquid in terms of if one or two of those markets are successful, then they only really need one or two markets one or two people to come in, create a product, and it be successful for them to 2 or 3x their annual revenues basically. The second proposal is this 𝗏𝗏𝗏𝗏, right? And you can think of 𝗏𝗏𝗏𝗏 like a translator. It's the bridge between the EVM, where contracts live, and hypercore, which is the L1, where execution happens, right? It makes sure your orders, balances, and updates actually go through and gets processed. What does that mean? Well, this is a bunch of technical jargon over here, and it's kind of hard to get your head around. So don't worry. You can pause the video here. You can go through it if you like, but from a very, very simple level. If we look here, on the left you've got the perpetual trading. On the right you've got the Hyper EVM. Because both can now talk to each other with this upgrade, you can do things like you can borrow against your position on the L1. So let's say you had $10,000 on the L1, and you might have $25,000 in a Bitcoin long position, and you want to borrow against that Bitcoin long position. No worries, because these two parts of the exchange can now talk to each other. You can borrow some dollars against your Bitcoin long. The more you borrow, the higher the chance of liquidation is, and then you can go and carry out DeFi with those dollars. That's like a massive upgrade that allows for enormous amounts of liquidity to come into the ecosystem. But not only that, it's new, it's different. These things don't exist anywhere else. Nowhere else can you borrow against a margin position unless it's in because essentially margin is already borrowing, right? If you've got a margin account and you're trading on it with leverage, you're already borrowing. So this creates another element of unlocking liquidity that previously you couldn't unlock. And what this allows for is actual new apps to be built. If we go through this is Hyperliquid L1 plus EVM combined. They haven't separated it on DeFi Llama. So on the L1, we've got $500 million in liquidity in the HLP protocol, which is like the liquidity of the whole ecosystem. Sorry, of the L1. We've got $1.3 billion, that means, in other stuff that exists on the EVM. But these are all things that currently exist on every other chain. They're just forked versions of other applications. So Hyperlend, Felix, Morpho, Hyperfi, they're all just borrow lend platforms, right? Hyper-B is kind of like a liquid staking, not quite, but kind of like a yield generating protocol. HyperSwap is a DEX. All of these things exist on every other chain. They're just standard forks of other EVM applications that exist on every chain. Nothing is necessarily special about any of these because none of these tap into the L1. That's changing, right? Very, very soon, with the release of these 𝗏𝗏𝗏𝗏 pre-compiles, the L1 and the EVM can talk, which means that you can create novel means new, you can create novel dApps that exist that can't exist on any other chain. So you've got that means that actual new stuff can be built, and who knows what could actually be built. I was asking ChatGPT to give me some ideas, and this isn't super exciting, but maybe you could launch an application where you deposit $10 if and you decide you go up or down on Bitcoin in the next 10 minutes, right? You just say up or down. If price goes up and you're right, when the 10 minutes expires, you earn 20x your money. And if the price goes down, at any point during that 10 minutes, you lose 100% of your money. But you put in $10 to win 200. If it comes down, you lose 10, so you don't lose 200, obviously. And if it goes up, then you make 20x on that. You could have a bunch of different applications that tap into the liquidity and the functionality of the L1, and they just have like some front end plastered on top of that. It creates actual new use cases that don't exist otherwise and can't exist otherwise. So those are the two upgrades that are happening. Again, those two upgrades are the core writer precompiles, the L1 and the EVM can talk to each other, which allows for new applications to be built. Who knows what's going to be built, but generally, when there's money to be made, people are smart, they go out and build cool shit. Number two, the HIP the Hyperliquid improvement proposal, HIP3, that allows for anybody to come in and launch their own perp market. If they're successful in launching their perp market, then Hyperliquid also massively benefits because there's a 50-50 fee share, right? So those are the two things. And what do they create? They fundamentally create a sink for Hype, the token itself. And a bet on Hype now is a bet that builders are going to come in and leverage this infrastructure. These upgrades, as I said, they almost decentralize Hyperliquid's need to continue to develop new, interesting, useful stuff. The core team can just sit back and focus on making sure the chain is performing as it should be, that there's no hacks, there's no the bounties are well looked after, they're maintaining the sort of like smart contracts as they should be maintained, and they haven't got to come in and build new stuff. They're giving this sort of like baton almost, if you like, to builders to come in and build some stuff. If builders don't come in and build some amazing stuff with this, then it's not, then Hype is sort of like stuck where it is. But if builders can come in and build new, interesting stuff, and you know, their sort of tagline is to house all of finance, if they can start to house much more of finance, it's going to be very, very bullish, in my opinion, for Hype generally. So that's what I think. Let me know what you think. Do you think these two upgrades will actually have any impact on Hyperliquid generally? Or do you think, much like sort of the spot market that was launched, the HIP1, it's much of a muchness, and I think the spot market's made them like $2.5 million so far. So, you know, definitely not been very successful really. Do you think it's going to be successful or not? Those two upgrades, again, EVM talks to the L1, and anybody can go and launch their own perp exchange, any perp market. Cool, that covers it. Let me know what you think in the comments. If you've got anything you want me to cover, any protocols you want me to dive deep into, again, just please let me know in the comments and I'll get into them. I wasn't here last week because I was in Ibiza, but I will definitely see you next week. I'm going to be coming at you with 2 videos a week actually from here, so if you've got suggestions, just again, please let me know. Otherwise, I hope you have an excellent day. Thank you ever so much for watching, and I shall see you in the next one.